switching gears, getting back to technology, Microsoft shares falling after missing on cloud revenue expectations in the fiscal fourth quarter for the company. This and the move this morning bringing to light the impact of Wall Street's lofty expectations for AI. For more on the results, let's bring in Brent Bracelin, who is the Piper Sandler Equity Research Analyst for Cloud Software and Analytics. Brent, great to see you first and foremost here this morning. You know, as I was taking a look at some of the results from the quarter and really listening into the tenor of the call and what the company was focusing in on here, there were a few things that they wanted to really continue to put front and center, and it's really about the Azure AI customers that are up nearly 60% year over year, average spend per customer continuing to grow. Wall Street doesn't seem too impressed though here.
Yeah, I mean, listen, on the surface, you're talking about the primary growth engine for Microsoft, their Azure business. This is an $80 billion run rate. Growth slowed there. The same quarter that spending on cloud infrastructure and AI infrastructure surged from 14 billion to 19 billion. And so that's a little bit of a confusing thing for investors, right? We're aggressively investing in cloud and AI, but your Azure business growth slowed. I think if you peel the onion, what you'll see here is that there was some macro weakness in Europe specifically that pressured like the pace of consumption of those Azure services. And we're talking about growth slowing from a guidance growth rate of 30 to 31%. To just 30%, the low end of their guided range. It is a downtick from last quarter, but again, what gives us confidence as we think about this Azure slowdown being temporary, they actually closed a record number of large Azure deals. When we say large, $10 million deals, $100 million deals, these are big commitments, large enterprises planning to spend more on Azure and with Microsoft. But the consumption isn't quite as fast as they expected. It will come, but there's clearly a disconnect between big customers signing commitments and then how that consumption pattern is trending, which again is tied a little bit to the macro.
Brent, when do you expect to see that reacceleration of growth?
Yeah, what Microsoft specifically said is they feel like growth could be in this high 20% range for the first half of their fiscal year, which is essentially September, December quarters, and then actually start to reaccelerate in the March and June quarters of next year. So we're talking about a bit of a pause on consumption, macro-driven here for 6 months, but they have line of sight to a reacceleration in that Azure business early next year.
And so all these things considered, how much should investors continue to watch Microsoft spend? And for the CapEx that has really come into focus for the broader industry and those who are best positioned within AI, what is kind of the barometer for how much they should be spending versus, you know, where it starts to become a little bit of a head scratcher because we're not going to see that immediate return, perhaps?
The ROI on that investment is the big debate in the marketplace right now, and has been, I'd say, a debate for the last 3 months. I think it's important to take a step back, look at the bigger picture here. And the bigger picture is it took about 13 years for Microsoft to build a new $100 billion cloud business. Over that 13-year period, they invested about $179 billion in CapEx. We're talking now Microsoft adding the next $100 billion in 3 years. So you're going to compress 13 years of CapEx spend in 3 years to add the next $100 billion. Microsoft's still generating north of 40% operating margins on that $100 billion, the next $100 billion. So we'll generate plenty of cash flow to help justify those investments. It's just in a very compressed period of time. And so we're in this elevated spending environment. Microsoft understands how to manage cloud CapEx expenses. They've been doing this for more than a decade. It just happens to be compressed in a very short period of time. It is a debate, but I would also tell you that about half of the CapEx spend that Microsoft is investing in is in long life assets that will be generating cloud services and AI services for well more than 15 years. We're talking real estate, power contracts, data center shells. So yes, the company has to invest in those things to drive the next $100 billion of revenue for the company. I think as an investor, we want that to happen. $100 billion creates lots of opportunities for incremental profit growth, but they have to buy the data centers. They have to have the land to do it, and they're doing that internationally.
First, I guess just the street's read on this quarter, we're looking at losses here. Not too big of a drop here, just around 1.5% in the pre-market. Is that the right read? Because it seems like there is a lot to like just from your commentary here within this report.
Listen, the stock's up 25% in the last 12 months based on optimism and this acceleration in AI and cloud acceleration. And it was a little bit of a downtick. So I get why expectations have been reset a little bit. But again, as you think about the bigger picture here, we would be buyers on the pullback. Yes, is there a temporary slowdown? I think it is temporary. And I think you're going to see, based on the activity, the success, a much stronger acceleration here going into the early part of next year. So yeah, we see the pullback as an opportunity to buy what we think is the best positioned cloud player and the best positioned AI company that is actually generating incremental revenue from AI today.
Brent, real quick, while we have you, there's still lots of talk just about the fallout here from the CrowdStrike outage. Clearly, it was a issue, a bug on CrowdStrike's side of things, but Microsoft caught up in it. There's been lots of questions about how this is going to be or how this has been perceived by investors, by customers. I'm curious how you're looking at that potential backlash from Microsoft.
Maybe listen, I'm certainly not a lawyer. I'm not going to wade in the deep waters of liability, but I think there is some blog post that Microsoft has responded to, and in some cases there's some legal regulatory pressures that limit Microsoft from trying to provide more protection. So this is a very complicated issue. I think it's not going to be resolved anytime soon, but clearly it involves regulators. It's going to involve lawyers. It's going to involve a lot of things. At the end of the day, there needs to be changes to make cloud more resilient and more safe.
All right, Brent Bracelin, great to have you. Thanks so much for hopping on here with us this morning. Piper Sandler's equity research analyst for cloud software and analytics. We appreciate it.
Thank you.